Alright, hi everybody. Celsius Holdings made big moves yesterday. The stock of Celsius Holdings, it was up close to 30% in a single day after they reported their most recent quarterly results. Is this move justified, and does Celsius still provide the value here? This is what we'll discuss in this video. So without further ado, let's get started. Alright, so as you can see on screen right here, Celsius experienced a major move in its stock on Friday. The stock is up it ended the day up actually 27%, almost 28%. Again, in a single day. That's obviously pretty wild for a company of this size. And there are reasons for this. And clearly the elephant in the room, so to speak, was the announced acquisition of Alani Nu, which is one of the strongest competitors and maybe most threatening competitors to Celsius business, because this is another fast-growing brand that is counterpositioned to the more established energy drink brands that Monster owns, and the Monster brand specifically, and of course Red Bull. And we'll get to that and the details and how these brands are positioned a little later in the video. What I will say is that Celsius disclosed the purchase price, which is around 3 times the sales of Alani Nu, and this doesn't strike me as a crazy high price, quite frankly. If you just assume that energy brand companies generate around maybe 20% steady state margins, that's around a 15 times multiple. Considering the growth rate that Alani Nu is still posting, I don't know, that's arguably cheap. I'm not sure if I would really go so far, but I would say it's certainly not, or it's not clearly a value destructive acquisition, and it could very well be a value accretive acquisition for Celsius Holdings, which is rare. Most acquisitions are only benefiting the company that is being acquired. Then next up, you may wonder, well, how does Celsius actually fund that acquisition? And they revealed that part of the transaction will be funded by taking on some debt, and then the remaining part of the transaction will be funded by issuing new shares in Celsius Holdings, around 22.5 million shares, which represents a little less than around 10% of the current shares outstanding of Celsius Holdings. And again, what this means for the valuation going forward, we will discuss a little later in the video, so please stay tuned. Okay, next up, I think still discussing the acquisition here, there are two sort of contradicting views on that transaction. On the left, you see a couple of tweets that, I don't know, I guess go in a similar direction. So Sleepwell Capital, for example, tweeted, "Why is Celsius up 30% when they are effectively acknowledging that they need to spend billions to buy competitors just to stay competitive themselves?" Then Brian Coughlin wrote, "This is exactly why I wouldn't touch Celsius Holdings in the energy drink space. Staying competitive means an endless merger and acquisition treadmill. There are no real moats." And he was retweeting a tweet by Matthew Cochrane, I guess that's how you pronounce his name, and he wrote, "If Celsius has to buy market share, well, there is no moat." But then on the other hand, you have maybe a contradicting view or perspective. This tweet here is from Batman Capital, and he tweeted, "Making great merger and acquisition at the right time, at the right or for the right price is a moat." So yeah, I'm curious to hear what you think about the transaction. Let me know in the comments down below whether you think it's value accretive or value destructive, or maybe value neutral for current Celsius shareholders. I mean, I guess what you have to point out here, once again, is that the market seems to appreciate that acquisition. The stock was, well, up around 1/3. Some more slides from the then issued investor relation presentation by Celsius Holdings that sort of give you an idea of the size that Alani Nu is already at itself. So I think this bar chart is actually quite interesting. It shows the year-over-year growth in actual retail sales, I think, of various energy drink brands. And as you can see, Alani Nu added around 300 million in sales in 2024. Celsius was the fastest growing company, much faster than Red Bull, for example, which is a much larger business in terms of absolute sales numbers. And Celsius themselves, that's the first box in the top right corner, they highlighted that the two brands combined now are going to drive 50% of the total energy market growth going forward. Then this bar chart here shows the development of both the top line of the newly formed Celsius Holdings that now encompasses the Alani Nu brand as well. So as you can see, the company will now be significantly bigger, will post top line of around $2 billion and adjusted EBITDA margins adjusted EBITDA of around $400 million, which would be based on around 20% EBITDA margin. Just to add on this discussion about the absolute dollar growth in the energy drink segment, let me quote what Andrew wrote about the Celsius quarterly result, and he's much more familiar with the industry as a whole. I will say, I think based on the research we did in our community a couple of months ago on the name, I think I have a much better understanding of the category and industry myself nowadays. However, I think one of the weak spots for me would be actually understanding consumer preferences here. As someone not living in the US, I just have a hard time assessing, well, which trends are coming up and I don't know, trendy, maybe threatening Celsius here, and how strong is the brand perception of Celsius right now. So that would be something that I just have a hard time assessing, which of course leads to the fact that I will have to have a higher hurdle rate to actually start investing in Celsius. So just to get back to the point, so Andrew wrote in my community, to quote him here, Celsius alone grew more by total dollars than even Red Bull, which is 3 times the size, and combining both Alani and Celsius, the growth is blowing the rest of the industry in total out of the water. In other words, the combined entity will make up around 15% of the market, but have over 50% of the growth, and that's in total dollars. So I don't know. I guess you can understand why the market is liking that transaction. Just to wrap up the discussion about the acquisition, here's a meme that I found quite funny. I'm not sure if I agree with that, but that's sort of a good transition to actually look at the financials posted by Celsius Holdings as well. Of course, first of all, full disclaimer, I don't own any Celsius stock. I've discussed it with Andrew on my channel. However, I recommend checking out this video, maybe after watching this video. And what I will say is, I think the market is, maybe I shouldn't say the market, but many investors are misinterpreting the numbers reported by Celsius Holdings. So let's take a look at it. So I think what most people get wrong about Celsius Holdings is they place too much focus on revenue. So if you would do that, I think then the quarter was pretty disappointing. So in Q4, year over year, the revenue numbers, or the revenue generated by Celsius, is actually down. It's down 4%, which, I don't know, considering the price that Celsius is trading at right now, it's still trading at above 20 times multiple. I don't know, that's pretty pricey for a company that is not growing at all, at least in the short term. Keep in mind that's only 1 quarter. Then if you just focus on revenue, the bright spot was, of course, international. So Celsius is still growing quite rapidly. Its international segment, it was up 37% if you compare the 2024 fiscal year to the 2023 fiscal year performance. And that's, of course, tremendous growth. Overall, the international revenue still only makes up around 5.5% of Celsius overall revenue. If you compare that to Monster's around 40% international revenue, well, it seems like there's still a lot of growth left for Celsius if they can execute the international strategy successfully. Then this slide was also shared by Celsius itself. I don't know, it shows that in the more recent quarters, revenue has been pretty stagnant, and you could argue that obviously all sorts of food and beverage categories and other categories, of course, as well, just think of fashion, they go through ups and downs. So maybe that's just natural, but as an investor, you definitely want to assess whether Celsius and the Celsius brand itself will have or will be able to pick up growth again. Now, what I will say, and this is reflected in this slide right here, is that if you zoom out, well, obviously, Celsius used to grow its revenue at an extremely high rate, and that's what you can see at the very top of this slide. So you have to read it from right to left, actually. So on the very left, you see the most recent year-over-year growth over the last 12 months, and as you can see, the company is pretty much no longer growing at all, and it used to grow at extremely high rates. I don't know, between 40 to 100% year over year. So those are incredibly high growth rates, which of course aren't sustainable. But the question is, will Celsius be able to pick up growth again? And the point I'm going to make here, that's a point I also made in my interview with Andrew, and also in a blog post that I shared with Celsius Holdings, is that revenue is maybe not the best metric to assess whether Celsius, the brand, is actually growing, because due to their partnership with Pepsi, the revenue metrics can be a bit skewed and may not reflect the reality in retail stores. So the sell-through in the actual retail stores where Celsius cans are sold, and maybe other Celsius products as well. So what Celsius does is they actually disclose the actual retail sales metrics. And I highlighted the two most important metrics here. So if you just look at the quarter, well, then the retail sales increased by 2% year over year in the most recent quarter. And if you look at the last 12 months, so again, we're zooming out and taking a look at the broader picture, then retail sales actually up around 22% year over year, which is, of course, much more impressive. And I guess that should or is a reason for many Celsius investors to be optimistic about the trajectory going forward of the Celsius brand. Which brings me to the current valuation of Celsius holdings. So, as I said, the stock is up around 30%. That's, of course, a massive jump. So obviously, if you bought Celsius, say in the low 20s, I think at one point it was trading close to $22 a share, and I had it on my watch list. But I have to be honest, like I probably wouldn't even have pulled the trigger if it would have declined below the $20 mark, just because I have my concerns about the quality of a beverage brand. But I'll get to that again in a moment. Speaking of Celsius, however, is it still attractive right now? And I did some math here. So first of all, Celsius right now is still trading at a market cap of $7.67 billion US. I also showed you here that the EBIT margin right now is around 11%. So it's trending downward again, which is something, I don't know. I don't think that's a good development for Celsius, but that's only a short-term development. I guess if you are bullish on Celsius, you're going to underwrite that they are going to be much more profitable at steady state. The SG&A margin is also a metric I like to track. I guess part of the thesis would be that the SG&A margin will come down more to around 25% of total revenue, which would be closer to its large peers, Monster and Red Bull. But yeah, that is something investors should track. So getting to my napkin math here. So first of all, post-acquisition, there will be more shares outstanding. So there will be, according to my math, 261.3 fully diluted shares outstanding. Or what I will have to say, I'm not sure if that's the fully diluted number or the basic number of shares outstanding. So maybe double check that. But based on that share count, well, then the actual market cap based on the current Celsius share price of around $32.6, the market cap of Celsius post-acquisition based on the current share price would be $8.5 billion US. If you now take the $2 billion that the combined Celsius and Alani Nu brands will generate, and assume that at steady state the business will earn a 20% margin, well, then you get to around 400 million in profits, which based on the market cap gives you around a 21 times multiple, which again, that's probably where some of my US viewers will have a better understanding of. But assuming that the Alani acquisition will re-accelerate growth, I think the odds of that are quite high, at least in the short and medium term. That's not an all too demanding multiple, I would say. And I want to be honest with you, I was actually surprised that the stock is still that cheap, like quote unquote cheap, after that 30% move. But that's of course because Celsius also bought revenue and profits with that acquisition. But that's sort of a look through multiple on a non-steady state basis. As you can see, those are numbers taken from Coifin, so last 12-month basis, just an 11% EBIT margin. The stock is much pricier. It's trading at close to 50 times EBIT. However, I would argue, and that would be the bullish case here, that this or the last 12-month EBIT is understating the actual earnings power potential of Celsius Holdings, especially after this acquisition. Finally, two more takes here. So first of all, a tweet by my investing friend Hugh Berkran. He wrote, when the market decides that a certain security deserves a different multiple, whether that is rated upward or downward, you better get out of its way. Way too many investors force their own views and insist that the market is wrong. So I want to acknowledge that the market is probably smart here. The 30% move in Celsius stock is probably justified. I'm not sure if there's more upside here. I was not a buyer in the low 20s, and I won't be a buyer right here. If I were a Celsius buyer, I wouldn't even know what to do here. Would I exit the position now and take the sweet gains, like the sweet gains over a relatively short period of time? I guess I would, but I don't really know. And obviously, nothing I say here on this channel is investing advice. Generally, always do your due diligence and consult with a financial advisor. Maybe finally, why did I not invest in Celsius Holdings? I wanted to include a snippet here from a quite recent Chris Meyer interview, the author of the book 100 Bagger. It was shared by the Substack of Lettuce Work by MOY Global. And he wrote, I'm just going to read that passage to you here. With this style, and now he's talking about his highly quality focused investing style. With this style, you allow stocks to run. Even when they become overvalued, you sit on them as long as the growth, returns on capital, and so forth are still there. There's a lot less turnover. It makes for a lot less frenetic existence. It's more of a peaceful, calm portfolio. Then I'm going to skip a couple of sentences here. Then he writes, the downsides are hard to point at. It's maybe more psychological because you pass on a lot of ideas, and then some of them work out very well. Sometimes you find something you know is really cheap and undervalued, but maybe the business isn't all that good. It's not something you would hold on to for a decade. You've got to let those go. That may be the downside, that it requires a little more discipline to stay and have that quality bar and not go on it. I think this sort of describes why I never invested in Celsius quite well. I think Celsius is probably a slightly above average business. It may be the next Monster. Obviously, Monster is one of the best performing stocks over the last 20 years in the US, I think. So that's sort of the counter argument. But I don't think that a beverage brand is a particularly strong business. I think there's always the risk that a new up and coming trending brand will come up, and you will have to carefully observe that. And that's just not in my wheelhouse, I guess. So I just prefer to set up a super high quality business, and then I just sit there and do pretty much nothing, enjoy the gains generated by the management teams of these businesses. Okay, with that, I'm going to wrap it up here. Take care. Talk to you soon.